Somebody said they saw you. The person you were kissing wasn't me.
What is going on, traders, investors, and all the people who are involved in these crazy cryptocurrencies market? It's been quite a long time since I actually made the last video for this channel. I've been actually focusing on my own personal trading and Cryptodicator as a whole. So Cryptodicator is going to be coming out with tons and tons of educational content. So if you're actually serious about this bull run, if you actually want to capitalize on these market dynamics and whatever is going to come through in the coming months or probably even years, you should certainly follow up with everything which is coming out from Cryptodicator. All the social media links are going to be down below in the description. You can head on to Twitter, you can head on to Instagram, you can stick to YouTube as well, because YouTube is going to be one of our key point of interest, I would say, where we are going to be focusing a lot because, well, most of the people like visual content and visual stuff and regular interaction. We also do have plans for podcasts which are going to be following up soon, later this year. But before that, before all the promises, I should actually start getting on to the price action real quick. So now, where are we? I'll tell you where we are. We are 10x above the capitulation from the COVID dump. Yeah, didn't see that coming. And this happened really soon. This happened like, it was just 300 days, not even a year. We have done a 10x in less than a year. So certainly, you are going to be looking at some profit-taking areas, some certain areas of interest which are going to be profit-taking zones. And to be honest, I mean, an asset doing a 10x in less than a year, yeah, your 10x ranges are going to be certainly areas of profit taking. And how have we confirmed that? We have confirmed it yesterday by finally losing control of the 21 moving average on the daily time frame. Well, now I have actually thought of making this video pretty short, but let's see, because you can talk hours about the price action in the markets, anyway. So we did close below the 21 moving average on a bearish engulf here, right here. Let me just get rid of the 21 moving average. Right? Yeah. So the simple structure narrative here is this squeeze, right? Everybody's looking at it. So we have price targets all the way down to 25,000, 26,000 regions. Could be possible. We got pretty close to it. In fact, if we actually take this 26,000 zones, yeah, 8%. Not bad. Not bad. Could have been potential areas of taking positions for the mid-term to short-term, but nothing is confirmed as of now, because we just confirmed one thing in the short-term, which is breakage of the trend bearer on a bearish engulf. As you can see, we have not had. Now this one could be certainly argued, but there was no volume follow through. I do not have volume on this chart. This just remind me to put some volume back on. Yeah, we did not have any high volume breakage below the 20 moving average, and the simple candle was a follow through candle, and this was considered as a pin bar. So this is not really a confirmed close in terms of how the overall price action is behaving in these zones. So that's why we just simply trapped all those bears who were thinking we are going to zero from 20,000 back to 3,000 from 20,000, right? So that you can pick some up for cheap. Not happening. Didn't happen. So we just continued the trend. So as we can look how beautifully the 21 moving average was holding up. Now certainly we have lost control of it. That means consolidation. Long story short, consolidation. We are going to be range bound, considering the top side to be 41,300 zones. Let me just take it. Yeah, 41,500 zones are going to be pretty interesting. Something to be taken note of in the coming days and months. That number is pretty significant here. And the second range is this one, the downside, where we just wigged. We're going to be considering this place, the area of interest, this point of liquidity entry has a potential reversal, right? And then we're going to be basing off our theories for today's video. So let's simply jump on to the 12-hour time frame. What do we have here? I can immediately look at it like support zone or support confluence. Actually, yeah, actually, yes, this makes sense to me. Could be potential area of liquidity inflow. We did come. I need to get better with trading view. In fact, we had a volume push here, we had a volume push here. Now we are coming back with some volume push again on these levels around 29,000. Pretty interesting to see, right? So what could be coming up in the immediate future? I do think we're going to be having a lot of chop in Bitcoin. We're going to be having a lot of chop here in these zones. So it's better to have a plan. You can't just simply start blindly betting that there's going to be the bottom. 100k next. It's not going lower. No, not. Anything can happen. You don't have crystal ball. You can't say it's going to go up from here. You can't say it's going to go down from here. Just remember that you're a trader. Anyway, so if you're looking at this structure as a certain liquidity entry zone, we're going to be testing back with the 21. Now remember, this is the 12-hour time frame. This is not relevant to the daily 21. We could be coming here back to test it again, probably test the diagonal resistance as well on a candle closing basis. So here's what I see. In fact, let me just simplify this. Okay, we could come up here back again. We could flirt around with this diagonal trending resistance at 35. That's a whole number. That's again a psychological point of resistance for this present structure, I would say. So certainly we could be coming up back here, test it, and see if we can close a candle above it. So here's the thing: if we are closing 12-hour candles above 35,000, then we can talk about reversing the trend in the short to mid term. But at least we are in for a little retest back up to figure out whether these points of liquidity exits are for real or not. You could be certainly hedging on these levels. I mean, a contract position which have been running for since forever. I think a lot of positions in the markets. A lot of people have actually nailed this entire move, breaking above the 10,000 zones. So a lot of big money would be focusing on hedging their exposure on these levels. Yet again, you've had a 400% gains. You at some point are going to be concerned about your capital, right? So that's where the concept of hedging comes in. We're going to be talking about all the hedging related things and how you would really want to hedge your exposure if you have spot exposure to Bitcoin or Ethereum, how you could hedge through certain futures and options as well. That's going to come up in the future videos with tons of other content. So make sure that you stick to the channel and you subscribe. This is just very weird to ask for you guys to subscribe here, but now let's just get back to the price action here. Let's look at the 4-hour time frame. Certainly one of the relevant time frame where you could say prices could start reversing out. What do we have here? Let me just get rid of every drawing that I just made. Okay, the 200. I'm sorry, this is the 200. Yeah, this is the 200 moving average. We had a good reaction coming from 29,000 again. Now 29,000 is looking to me like an area of interest coming in at different time frames, and if you are actually coming on to a conclusion, you have to find confluence of certain indicators coming at one single point, telling you where the buyers are going to be lining up to actually buy back up and take the prices higher. The bulls basically. So bulls are showing up for the short-term time frame on the 29,000 zones, which is quite interesting to me. We could certainly be having a retest back. All I can see right now is a simple retest back to this diagonal trending resistance line. Now arguably you could do this as well. This makes this entire triangle not a triangle anymore. This makes this as a falling wedge. Or on the bigger time frames, now just you got to be very precise in determining the time frames. On the bigger time frame, this could be looked as a pennant, not even on the 12-hour day, on the 3-day time frame. That's pretty much more relevant. We did have a bearish engulf on the 3-day as well. We're going to be talking about this as well. All right, so yeah, in context to the 3-day time frame price action behavior, you can certainly be in a pennant which could have a breakout target 57, 58, 60. Let's just round it off. $60,000. But the small term time frames are going to be extrapolating the prices, the price action that would certainly lead on to the further development of the higher term time frames, which are going to be extrapolating furthermore. So you take step by step. Remember, this analysis is for traders. If you're a hodler, if you're an investor, you're just better off buying and hodling it, I guess. It's particularly fine, because you have just broken the all-time high and the fireworks are yet to begin. Simply said. The key area of interest, now since we're talking about the macro, key area of interest are these 20,000, 25,000. How do I back this up? I back this up by a little Fibonacci. Okay. Yep, there we go. 1-to-1 retracement at 19,000, and we have 1.272 coming at 24, and we have 1.618. There we go. The point of interest, the point of liquidity entering the space. Not the space, probably the long position, or maybe just getting back into BTC from your stable coins. Could be anything. You could be trading anything, USDT, you could be trading INR, you could be trading anything, I guess. So 1.618 clearly looks like a good area of interest for a little pick back up, and probably test some upside again. Current bias in the short term. All right, let's just summarize whatever we have discussed right now. Short-term time frames look they do look to me like we could nibble around here for quite a bit amount of time actually in these zones. I really need to work on my circles, man. This is not looking good now. Okay, I'm just going to be going on with the triangle box. In fact, you would want to be concerned about the price action if you are looking at 4-hour closures below 30,000. Yeah, let's just round it off. Below 30,000, 4-hour time frame closure is going to be back into risk zones, and then we could talk about downside targets. Until the 4-hour candle is closing above 30,000, 30,000, you're good. This trend is okay. Looks okay to me. The liquidity, you can certainly see a liquidity point, 29,000 as a liquidity point, and we could certainly be looking at some retest of the prior highs. The first breakdown is 37,500. The second breakdown is 35,500. 35,000 is again a significant level to be taking a look at. Just getting rid of the Fibonacci, going level by level. This one, and certainly below 30,000. All right, we could be looking at this range as well. It looks like a graph paper. It looks like a notebook. Okay. Closure above the 200 simple, which is above 31,800. We head to 33,600. Interesting move if you are picking it up. There's a 5%. 5% is good for a ranging behavior. 5% is going to be damn good. If we break this, we head to 35. If 35 is broken, we head to 37,400. Another key area of significance. Let me just put on my volume profile ranges so that we can take a look at that as well more precisely. Let me just set it out to completely like 100% visibility. That's what I want. Yep, you're looking at, let me just close the downside volume. Alright, okay. Now this is your structure. We're going to be dealing with this bearish structure for the volume profile as well. And as you can see, we have, where are my tools? We have this area of volume node, which is of us, which I think it is significant. Certainly 30,000, 29,000, significant. We have volume coming up here, and if we are actually successfully able to close above the 200 simple moving average on the 4-hour time frame, we do head to these areas of interest in the volume zone. So we could be looking at volume chop out here, and now then certainly floating up. Just goes level by level. Market can't just simply go in one single direction all the time. Well, it did BTC did that. but you have certainly entered into a more consolidation kind of zones because of the bearish engulf close that we had below the 21 moving average yesterday. Well, I think that's enough. That's enough for the short term, the extremely short term analysis, right? Extremely short term analysis says that areas of interest are 33,500, 35,500, and to the downside we have 30,000 as a key zone of interest. 12 hour, 4 hour, 2 hour, anything closes below 30,000, that's going to be looking a little more bearish, a little more distribution-ish for the coming days or maybe weeks. I think that's it. I think that's been it. I thought this video is going to be small, but I think as a trader you can keep on talking about things and it's just never stop. Anyway, have a nice day. Bye for now.